The floodgates have bursted. The market is really just frenetic right now. It's hard to find deals. There's a ton of cash, a ton of equity. There's money all over the United States. There's money all over the world that's looking to get into Florida.
This episode brought to you by Suites at Madison. Meeting and conference rooms for rent by the hour, week, month, or year. Suites at Madison, where business gets done. Check them out at www.downtowntampaoffice.com. Now, on to the show.
You are listening to the Invest Florida Real Estate Show, covering topics in lending, buy and sell strategies, property management, hot markets, and tips and tools to guide you along the way on your path to real estate success. You want Florida investment real estate talk? You have come to the right place. And now, our hosts, Eric Odom and Steven Silverman.
Hello and welcome to another episode of the Invest Florida Real Estate Show. This is your co-host, Eric Odom, along with Steven Silverman. Steven, it's been a while since we've done any podcast that's directed towards our international buyers.
And really, the knowledge for international buyers is important because they have to learn not only about the property, about how to do business here also.
Yeah, no doubt about it. And probably a third of our listeners come from outside of the country. The UK, Canada, Germany, Brazil are some of the larger blocks that make up buying investment properties in the state of Florida. And most of our conversations, frankly, revolve around single-family homes and multifamily. But there's also an interest in retail and office and industrial. And, there's opportunities there too, Stephen. That's what we do. I mean, we will buy retail properties for clients and then manage them so that it's a turnkey solution for our clients, right?
Well, let's talk about the deal that you did just last week, because, I have investors coming to me sometimes and they say that I want to invest in real estate, but I can't go into big commercial properties. And so they tend to go to houses where they could get rental income. But there are also small commercial properties where you can generate a decent deal. The quality of the tenant is always important in that kind of an asset.
Yeah, if we don't have a lot of money to invest, there are other alternatives. I mean, this deal that you talked about, which I just completed, was a condominium, and it was office condominium. And there were two long-term tenants in the condo. It works out pretty well for a foreign buyer, frankly, because they are capable of the condo association, that's what I meant by they, take care of the exterior of the property, the parking lot, and all those sorts of things. And really, the interior, for the most part, is taken care of by the tenant. The exception is if you've got a really large expense or maintenance issue like air conditioning, but everything else is pretty much hands off, and we're available to manage those types of properties. And it's really a relatively small amount of effort on our part. Occasionally, we're having to deal with an insurance payment, paying the insurance company, and occasionally dealing with the condo association on an issue, and we'll represent the owner in that. But the bottom line is that type of investment it almost simulates a single tenant triple net deal, and it's relatively inexpensive. I think we were in there in two different condos. We were $550,000. Yeah.
There's some advantages too, because you can get a 5-year lease out of that, whereas, in residential properties, they're signing 1-year leases at a time.
Yeah. I mean, you get a 5-year deal. I mean, this was with a national tenant and a local medical service provider that has been in that location for 10 years. So it's unlikely that they're going to be moving anytime soon. You had two good tenants, two decent cash flows, and not a lot of risk that you're going to have a vacant space. And unlike if you're dealing with a residential home, every year you're turning over, every 18 months or 2 years, you're turning over a tenant, and then you have to invest money into fixing that, painting it, and fixing whatever repairs might have been done by the previous tenant. And so this is, there's options. I guess that's really the point that we're trying to get across, Stephen.
Okay, well, we're talking about foreign investors, and that would be a good asset class for them. But today we're going to talk about foreign investors and things they should consider when investing in the United States and in Florida.
Yeah, no doubt about it. And as a reminder, as we do every show, we ask you guys, if you have not taken the time to give us a review on iTunes or Google Play Store, it would be much appreciated. It is a challenge for us to find guests for you each and every week that are going to bring value to the show. We have to ask numerous people before we get someone to tell us yes. And part of the process for those folks when they're looking at whether they're going to spend time with us and with you is how interactive are our listeners. And if you guys are leaving reviews, it makes them feel good that there are people listening, and it gives them a reason to come on and spend their time with us. So if you've not done that on iTunes Store, the App Store, or on the Google Play Store, would greatly appreciate you going on there and giving us a review now. Stephen, are there any more housekeeping items that we need to discuss before we roll on with our guest?
Housekeeping's done. Let's roll. Today we have with us James Schmidt. James is the founder of the Tampa law firm of James A. Schmidt, PA. He practices in the area of business, tax, and real estate law. Before practicing law, James worked as a CPA for 8 years in both the audit and tax fields and provided transaction services in public stock and debt offerings. James actively represents a global client group in their investments in the U.S., and more specifically in the Florida real estate and syndication markets. He has extensive experience counseling business entities and their owners and stakeholders on governance issues and arising in closely held businesses. James is married to a lady from South America, and he loves international travel. He belongs to an international network of professionals, which is a useful platform for his global client base that is interested in investing in the U.S. and more specifically in Florida. James, welcome to the Invest Florida Show.
Thank you, Stephen. Pleasure to be here.
Hey, James, really appreciate the time that you're investing with today. And also, I want to give a shout out to Dan Pepper, one of our listeners and past guests who made the introduction to us, to you. And really appreciate Dan making that intro. And we've got a great guest on today with James. So, James, thanks so much for your time today.
It's my pleasure, Eric.
And why don't you get started with us a little bit talking about, you've got a diverse background, not just in law, but also in accounting, and how you manipulated this path that you're on now.
Yeah, so first of all, James, before you start, I can tell you I would shoot myself twice, once for becoming an attorney and the other time for becoming a CPA. So I'm glad you're here with us.
You're welcome, guys. It's good to be here. I'll be honest with you. I don't know how I got here. We go through life. We make a lot of decisions as we go, and we get down the road and we realize we're where we want to be, or we're not where we want to be. I was a student athlete in college, and really that was a business school. So I ended up picking up accounting and finance. It wasn't my dream, but I ended up going on and getting the CPA designation. I was working in that field. I enjoyed the transactional part of it, where I was getting to work on some mergers and acquisitions, but I really wasn't enjoying the sort of day in, day out, audit work and accounting work. And so I went back to school, got my law degree, and that really changed the landscape dramatically. I was invited to to go into a number of directions. You can go into tax law, securities law, bankruptcy law, business transactions, business litigation. An attorney's success in each of these areas is significantly enhanced if the attorney has strong accounting, finance, and or tax knowledge. I was interested in coming to Florida. I came down here after law school kind of on a whim. I was planning to stay for maybe a year and then returning back up to the Northeast, which is where I'm from. I don't know. I got an entrepreneurial wind in my sails, and I decided to stay. This was back in 2008, which was a horrible time to be doing almost anything, even buying real estate for cash. It wasn't a good time to buy real estate because we weren't even sure where the market was going to bottom out. But I got into the practice of law, and I was working on all kinds of stuff early on, a lot of cancellation of debt, taxation issues. But eventually, the sort of the transactional volume came back, which was really what I enjoy working with entrepreneurs, and entrepreneurs are always creating things, whether it's they're buying real estate and improving it, if they're, buying a company and figuring out the most valuable parts and getting rid of the parts that aren't that valuable and enhancing the more valuable parts. So that transactional practice, so gradually sort of took off starting in around 2011, 2012. The banks were back in the game. There was a lot of lending going on, a lot of refinancing. So I got really busy with the lenders and more transactional work. And as you guys know, the floodgates have bursted. The market is really just frenetic right now. It's hard to find deals. There's a ton of cash, a ton of equity. There's money all over the United States that is interested in getting into Florida. There's money all over the world that's looking to get into Florida. When you're looking at the money outside of the United States, sometimes it's not just because somebody's looking for a return on their investment. A lot of times they're fleeing, political instability, or they're trying to, set aside sort of some sort of nest egg or safe money in the event, they can't get the money out later, or just to deal with insurance against any number of circumstances that could arise in their home jurisdiction. So it's been a good ride. I got to credit guys like Dan and lots of other people in Tampa. This is a great place to do business. And I've done plenty of deals with Dan. I've done deals with, I'm sure we've done deals with, mutual clients. And it's been a lot of fun. And right now it looks good. I mean, a lot of the guys that I speak with, they really feel like the market's going to keep going for another couple years. I guess if we can get through this election without too much turmoil. So right now the indicators look good.
So, when owners of real estate here start thinking about selling their properties, they always talk magically about foreign investors coming. But there's something different about foreign investors, isn't it? Like, what is it in the USA market that's different for foreign investors, and what should owners of real estate in our state be aware of if they want to cater to foreign investors?
Yeah, and so what are some of the issues that the foreign investors, when they're coming here, that maybe they don't know about, that all of a sudden it's a surprise to them when they're looking to invest here, and like what's things that they need to think about?
Well, you're right. There are some differences. I don't really feel like the differences are that dramatic, though, especially for sophisticated investors or sophisticated foreign persons. If they're coming here and they've never done business here before, there's going to be a lot of challenges. Sometimes they just can't wrap their head around all sorts of things, how to open a bank account, how to get a tax ID number, why am I going to spend a couple $1,000s on an attorney? I mean, things like this, because, some of their home markets just are not that sophisticated. They don't have to deal with these issues. But here you have to deal with all those issues. So, but most of my clients tend to be guys who are on, their third, fourth, fifth deal, or they've done so many deals that we don't even need to deal with that stuff. If they've got bank accounts and they've got their accountants and they've already filed tax returns, it's easier for the lenders to get comfortable with them. So I'm not typically working with guys who have never done a deal before in the United States. If you haven't done a deal, it's fine. If you're going to need to have some capital, usually 20, or more likely if it's your first deal, you're going to need probably closer to 30% of the purchase price in cash. You're going to need real collateral in the United States, sort of give the bank some comfort. On the disposition side, the only thing you really have to worry about is the FIRPTA withholding. That's different from, your sort of traditional U.S. person where.
Yeah, let's explain what that is, FIRPTA, because if that for some folks, that's going to be the first time they've heard that.
Yeah, that's your foreign interest in real property withholding.
So that's an IRS related issue.
Yeah, it's an IRS thing. When you go to sell, there's going to be an automatic 15% withholding from the purchase price for a foreign seller, from a non-resident, a non-U.S. person. And let's say you're only clearing 10% on the deal after you've paid off all your debt and your closing costs. That doesn't mean that the withholding is the lesser of 15% or what you're clearing on the deal. I mean, you still need to withhold the 15%. So that can be tricky for a non-resident person to understand that there's this big withholding and you're only going to get it back at the end of the year once you file your tax return and petition the IRS for a refund. So if you're closing your deal in January and, it's $1 million sale, well, then you're going to have $150,000 that's sitting with the IRS until you file your tax return at the end of, after December 31 of that year. So if you're closing your deal in November or December, it doesn't hurt quite as bad. The FIRPTA can be a bit of a pinch, but the nice thing that you can do if you've got the resource and you can spend an extra couple bucks, we can go ahead and apply for a withholding certificate, which is a special application to the IRS to withhold less. And we've done those before. Basically, you have to submit an application and you say, here's my deal. This is what I bought it for. This is what I'm selling it for. This is what I expect. These are my closing costs. This is what I expect to make. And this is what I think my tax is going to be. And you put all that in, you put all that together, send it to the IRS. And I think it's something like 45 days later, they should reply with, your withholding certificate, which is going to allow the title agent or the closing agent to withhold less money at closing. So that's a nice little trick if you're looking to hold on to more of your cash. If not, either way, you've got to file a tax return at the end of the year. So, you need to build your team out, make sure you've got a good U.S.-based accountant that can, file your 1040 NR, which is your 1040 non-resident form.
So you're not handling the accounting side of things for your clients. You're dealing with the legal side, or are you doing both, James?
No, I'll do the tax work, preparing the tax forms, filing for withholding certificates. That you can justify hiring me to do that kind of work. I'm not doing bookkeeping. It doesn't make sense at my hourly rate. We'll go, if you're going to buy something and you need, someone just to help you with your bookkeeping, your accounting, we can go find someone to do that. Or if you've got a property manager, a lot of times they'll include the bookkeeping and the accounting services in the property management fee. When you get to the end of the year, if you need a tax return, we'll do that. We don't really lead with that. That's not the business that we're promoting and really trying to sell. We're really out there to be your advisor and to get you through a transaction, help you negotiate your documents and get your deal closed. But we're happy to provide the tax services as well. I'd rather have my client, come to me for the tax work than, tell them, no, I'm not going to do it. And then, they go and get somebody else to do it and they screw it all up. So we're happy to do that work as well.
So for the foreign investor who's coming in and wants to make an investment, it's very difficult. Just first, he's got to find a realtor, go put a contract on. But how should he set himself up first so that he can best conclude that transaction?
Yeah, I mean, really, it's about, and I'm just kind of,
you have to
kickstart a little bit. There's a team.
You have to put a team into
because
practice,
obviously, Stephen and I are not attorneys, and we need help guiding these guys through a transaction or helping with the property management. We do the property management too, but and we don't do accounting. So all these are very compartmentalized. And maybe, James, you can shed some light on, like, typically the process of when an investor is coming to you, what's happening to make sure that they've got all of the members in place to properly execute and manage that transaction and that asset.
No, you're right. The team concept is absolutely there. So, like, for instance, say there's somebody listening right now and they say, oh, wow, I'm really excited. I want to go invest some money in Florida. Maybe the first thing they're going to do is reach out to one of you guys. You're active real estate brokers. You're knowledgeable about what's going on in the market. That's usually the first place somebody is going to start with, some sort of broker or person that's actually in the market who has access to the deals. But they really can't stop there. After they call one of you and they say, okay, I'm getting a sense of, what does it cost to buy an apartment building? What does it cost to buy a strip center? What does it cost if I want to buy 20 apartments? What does it cost if I want to buy 100 apartments? What kinds of deals are out there? What can I afford? Without getting deep into the purchase process, if they say, I'm going to bring, I can afford to bring 30 to 40% of the cash to the closing table. That's going to help a lot with a lender who is going to be financing the other 60, 65, 70%. But, once, they get introduced to a deal that they like, say it's $1 million deal and they have, $300,000 or $400,000 that they can bring to the table, it would be prudent for them to almost immediately go out and find someone like me. I'm not trying to, solicit work, but, I'm being candid in my experience. I think that the process is complicated. The FAR agreements and the standard, that's the Florida Association of Realtor purchase contract, sort of the standard contracts. I try to avoid them at all costs when I'm representing parties. We've got, purchase documents, which are, tailored for the property class, tailored for whoever I'm representing, the buyer or the seller. So, having access to somebody who can get the deal into the right contract and, make sure it includes all the right protections during due diligence, all the right ways out of the contract. If you're unhappy with how things are going, if you need more time for financing, or whatever your needs are as a buyer, with all due respect, you're just not going to get that out of your broker. Your broker is going to introduce you to the deal, and almost instantaneously, you're going to need someone to help you get it under contract. And if you're going to use the form contracts, you are playing Russian roulette, kind of.
Well, James, let's talk about that a moment. We're both realtors, and are you speaking specifically about foreign investors using those contracts or using them in general? And what are the problems that you see with the standard Florida real estate contracts?
Yeah, I'm just speaking generally. Whether the person is coming from California, they're coming from Canada, they're coming from, anywhere, Europe, anywhere. The standard form contracts are really just very generic, basic forms that are sort of a one size fits all document. But the reality is, every transaction is unique, and the purchase agreement needs to be tailored to that transaction and to the unique characteristics of that transaction, depending on what the buyer has to offer in terms of financial statements, in terms of what's available for due diligence, in terms of what some of the considerations might be with the building, with parking, with your own financing and your ability to get financing. All of those considerations are nuanced and they vary from deal to deal. And the standard forms just don't take any of that into consideration. So, after finding the deal, whether the buyer is coming out of California or they're coming out of, the UK or something, having a good attorney to sort of help them get it under contract is good advice, or a good step to take. The attorney is also going to help them, set all their entities up, whether it's one LLC or if it's some sort of two-tiered partnership, because the buyer wants to have, a separate management company, whatever it is, help them get their bank accounts open, help them get their tax ID numbers. All of that work involves, a second professional. And then thirdly, they need a property manager. They need someone to help them manage this property, unless they're planning on moving here and living on site, which, even if they're doing that, they should probably still get someone to help them in the beginning. They need someone who is a professional property manager who understands, how leases work and how the market works for tenants, and, what kind of rents can they get away with, and, what sorts of repairs are they going to be on the hook for. So it's a real team effort, and your lender's going to be, as long as you're not buying it cash, your lender or your loan officer is going to be an integral part of your team in the beginning, because the deal doesn't happen without the bank.
Can you talk a little bit, because finance is obviously, when you're in the international guys, is going to be a big issue. Are there lenders that you found that tend to be a little bit more open-minded about entertaining foreign investors? And if so, you talked about the down payment. Are there any other issues that perhaps are important to some of these lenders when they're dealing with a foreign buyer?
Yeah, you're almost universally going to be working with some sort of conventional lender. Conventional lender means somebody other than, Fannie Mae or Freddie Mac. Those guys have fantastic programs. If you're here in the U.S. and you're established and you've got a good balance sheet, then the Fannie Mae and the Freddie Mac programs are fantastic. Anybody who's in the market probably already knows that. But if you don't have those credentials, or you're coming from outside of the United States, then you're going to be using sort of traditional bank financing, which means that you're going to have to put up more cash, which is, your lender might say, we won't do the deal with less than 30% down, or maybe even more, depending on the lender. And they're going to really look at the deal from their point of view. They're going to hold the loan on the balance sheet. It's going to be, they're almost investors in the deal, quite frankly. They're going to look at the deal very closely.
Have you found any difference, though, on what kind of a lender should a foreign investor approach? Should he go to community banks? Should he go to the larger national banks?
Yeah, I think the community banks are way more flexible. The larger banks have big established business lines, and they have less to gain from to working on the fringes. They've already got big established, markets that they're operating in. And, investing in commercial real estate sometimes isn't really even something they're very interested in. So you're really going to be looking at community banks, which is going to be a challenge because, if you're a non-resident, you're a non-U.S. person, sure, you've probably heard of JP Morgan and the Bank of America and Wells Fargo, but maybe you haven't heard of Florida First Integrity or something, which is a fantastic small community bank or home bank or something like that. So, and those are really those smaller community banks. Those are the banks that are going to have the flexibility to, put a deal together for you, to put the financing together. They're also a little bit less sophisticated, so you need to be patient with them as they are trying to understand your transaction and understand why would they want to be the lender on the deal. This begins to kind of get into the contract again, right? Because we might want to negotiate or include some sort of automatic extensions for financing, which you could incorporate those terms into your standard FARBAR contract, but you're going to have to put that in the additional clauses section. And that just kind of sticks out. People always look at that more closely and they say, oh, what are these additional clauses? I was expecting that section to be blank. Whereas if you're drafting your own purchase agreement, you can sort of embed those terms into the agreement without really much fanfare. In fact, we're just closed a deal not long ago where we included some of those terms, and we went to exercise our right to extend the closing date, and the seller hadn't even noticed that we had included those terms in there. So it's just easier to incorporate those terms into the contracts when you're drafting them on your own.
Actually, that's a major point that I never ever really considered, is that where you can often still use the standard FARBAR and FAR contracts, when you put in those clauses as an addendum or in the additional notes, they do stand out and raise questions. And people probably often overlook the small print when it's in a contract.
Yeah, no question. And the other thing, I just had the opportunity to talk a little bit more about the FARBAR. I mean, one of the things we found people would ask, like specifically, like, why can't I use the FARBAR? Well, you can on pretty basic contract or pretty basic transactions. You can. I don't, it's not that big of a deal. But where it starts becoming an issue is I would tell people to look specifically at the clauses that talk about the due diligence period. And they're very narrow and very specific on how you can exit the deal. And many times, when you're dealing on let's say you're a retailer that's coming in and you're buying a center and you're going to lease out whatever the residual is, but you have a specific use that you've got to check on the parking. I defy you to find in that FAR contract the parking requirements for your specific use. You have to put that into the additional clauses. There's no choice. And then, as you guys both have mentioned, now you've triggered an additional set of eyes. Nobody likes the contingencies in contracts. And so you want them in a flowing text that doesn't attract unnecessary attention, that could potentially cause you to lose a deal, because now the person's saying, oh, he's got this clause and this contingency, and now all of a sudden the deal's going sideways. You spent 6 months trying to find a deal, and now it's sideways because it's not flowing properly. This is
exactly right, Eric. It's penny wise, pound foolish. You're better off spending a couple $1,000s up front, getting a nice contract together. And, you can use the contract on the next deal too. If the deal falls through, or even if you do close on it and you go do another one a year later, you can start, you're still a buyer. So some of your concerns are the same. So we would go ahead and massage what we had created for you. But, it's not, you've got some residual value there.
Yep. So James, how are your deals coming to you primarily? Are they through referrals through your international network, or are they coming through brokers? Because it is a challenge for people in this market. We know that there's a significant number of foreign buyers, but how they're getting their transactions, always sort of a mystery. Stephen and I have relationships overseas that we have contacts that will lead us to some of these foreign buyers. Stephen's favorite form of buyer is from the Middle East. I mean, his Israeli contacts, but also he gets the Egyptians and Jordanians, and it's crazy the connections that he's made that sort of lend one to the next, and he gets these referrals. But how is that working for you? How are you finding your deals that people are coming and finding you?
It's a lot of the buyers are from outside of Florida. Okay, we know that. They're coming from all over the United States, and they're coming from outside of the United States. And the first thing they're going to do is typically they're going to reach out to a broker. And then usually what happens after that is, they tell their broker, hey, I feel like I need an attorney to help me with this. They've heard a lot about the U.S. legal system, or, they're smart enough to know that, they're from New York and they need, they've got attorneys in New York or Ohio, wherever they're from. They're smart enough to know, like, oh, I probably need an attorney in Florida, minding this transaction for me. So a lot of the deals do come from the brokers. But it's not, I guess how to say, I'd like to think that I've earned it. I mean, I've worked hard, to provide good representation, and not all deals get to the closing table. But if a deal doesn't get to the closing table, and if it doesn't get to the closing table for a good reason, usually the broker understands that. He or she understands that, that deal was not meant to happen. It wasn't the right deal for that buyer. Or the seller wasn't getting the purchase price that they wanted. So, I just work hard to deliver good value, to try to be diligent, to pay attention, to make sure that I am, protecting my client. A lot of times my client is not in Florida. Maybe they were here once or twice just for an initial meeting with me. But then they're not there for closing. I've had clients give me a power of attorney and just ask me to close the transaction for them, or we're doing a lot of things through correspondence, and they put a lot of trust in me. So I just try to work hard to protect them and to make sure they're covered. So a lot of it does come through the brokers. A lot of it comes through lenders too. People come through the market and they say, the lender says, hey, James, here's a guy who is really strong, great balance sheet. He's interested in doing a deal and he needs an attorney. So I get a lot of referrals through lenders. And I get a lot of referrals through other attorneys as well. not so much the real estate work, but other people who are just doing deal work, whether it's a tax attorney at a big firm and, they want to do a real estate deal and they just don't want to pay the big firm price. So they're looking for a smaller firm like myself to handle the real estate transaction. So a lot of it does come from outside referrals.
So, James, this, I think for any international investor, this has been a really tremendous education. If somebody wants to reach you, how can they get hold of you?
Well, the easiest way to reach me is just to go to my webpage. That's schmidtlawoffice.com. And that's SCHMIDT. So schmidtlawoffice.com. All my contact information is there. Phone number, email, our office address. We're in the process of moving. We just bought a building. I'm pretty excited about that. So we're moving into the new space in about a month or two. So, the best way to start is just go to the website. All the information is there. And you can also read about, what we do in our different practice areas and, background and all of that as well.
James, really appreciate the time that you spent with us today. Anything else before we let James go?
No, perhaps sometimes we'll talk on some other subject, but international was something we hadn't covered and it was important. So thank you.
Been my pleasure, guys.
James, thank you so much.
Take care. And
that was James Schmidt. He's an attorney here in Tampa, Florida, helping out with, not just foreign investors, but that is a focus of his firm. He does real estate transactions all over the place, all over the country, really. But he does deal with a lot of international buyers and can lend some insight on what they need to think about when they're coming into the Florida market. What were your thoughts, Stephen?
Well, the takeaway from this is that foreign buyers do need to take special precautions. They need to learn the market. They need to get good advice. And building a team is paramount.
Yeah, you've got broker, property manager, lawyer, and accountant.
And property inspection and maybe engineering, maybe zoning issues. You need to have a whole team to take care of things.
Yeah, and it's particularly important for the foreign buyer. They have to have some folks on the ground that they can trust because they can't just hop in a car and drive 30 minutes away and try to solve an issue. So they've got to have people on the ground locally that can help them execute whatever goals they have on the particular asset that they're purchasing. Stephen, James was a great guest. Where can our listeners find other great guests to try to enrich their real estate careers?
The place that everyone should go is www.investfloridashow.com. That's our website. Download the app onto your mobile device so that you can listen while you're in the gym, if you do that, or while you're on the road.
Guys, as always, we appreciate the time that you invest with us each and every episode. And until next time, hasta la vista.
You've just listened to the Invest Florida podcast with Eric Odom and Stephen Silverman. Join us every week for actionable real estate investment ideas and, of course, visit our website at www.investfloridashow.com for more shows and tips on how to earn a cash flow in the real estate market in Florida. While hosts and producers of the Invest Florida show have no reason to doubt the validity of comments of our guests, we do not warranty their accuracy. Please check with your legal, financial, and tax advisors before entering into any investment. Returns will vary from person to person and deal to deal based on unique circumstances. All information expressed in this show is for educational purposes only. Opinions of the guests are not necessarily shared by the hosts and producers of the Invest Florida show.